All right, good morning, traders. Today it's September 29th, 2025. My name is John Carignan. I'm the lead instructor here at the BYOB Trading Room. Thank you for being here. BYOB is the day trading service for the hit and run candlesticks family or franchise. All right, I don't know if he's branching out yet, so family right now for the family. All right, so again, thank you for being here. Thank you, everybody in podcast land, digital land, cyber land. Thank you so much for subscribing to my content, following my content, liking my content, hearting my content, sharing my content. Special shout out to Kathy, Sarah Roasted, John Jordan, Bob Jordan. Everybody that shares it helps to get the good word out there. Thank you so much for all of that. I appreciate that. Let's go take a look at what happened on Friday. All right, and let's pull it up, the summary from Friday. Let's pull up the summary. All right, so my SPY pivot this morning, 660.30 above it. I'm a bull, below it I'm a bear. SPY, Diamond Dow, IWM, QQQ made higher highs and higher lows, closing over their traps. Some had bull traps, some had bear traps. And over their 17 EMAs, FNGU made it inside day. That's a lower high and a higher low, closing under a bearish trap, but over the 17 EMA. SPY closed with a 2-hour uptrend. 10-minute bullish consolidation. Really kind of a 10-minute uptrend, but not much space between the 3 and the 8. We'll take a look at it in a minute. It's in a bull flag. And of course, you can see the pop that we got this morning in the pre-market or overnight, however you want to look at it. Silver made a new 14-year high. Woohoo! Love that. Okay, gold made a higher low and a higher high, closing over a bullish trap over the 17. USO made a higher low and a higher high, closing over a bullish trap over the 17. UNG made a lower high and a lower low, closing under a bearish trap under the 17. No surprise there. US dollar index still in a downtrend, closed near the 98.21 area, still in a bear flag. SPY max pain is 661 today, with a put to call ratio of about 2.25 puts for each call that expires today. Remember, those index options expire at 4:15. Security options expire at 4. The main event this week for the economic calendar is the employment situation at 8:30 on Friday. Okay, the markets will probably be volatile at 8:30. Not to mention they'll be volatile when the market opens up. It's it's a Friday, so there'll be a weekly options expiring. So that's the main event. Okay, if you're looking at this for the first time, these are all in bullish uptrends over the 17 EMA right here. If they got a little star, they're building out a launch pad, all right, from which to launch higher. In other words, a nice clean bull flag, all right? So there we are with those. They got a nice clean bull flag to launch higher. These are all in downtrends. See the bears? All in downtrends under the 17 EMA. If you see a little star, they're building out a platform. In other words, a bear flag from which to dip lower, all right? So there we are with bulls and bears. If you're interested in anything other than QQQ and SPY, QQQ and SPY are my favorites to trade. I pretty much trade them almost every day, unless, of course, they're flat. All right, let's take a look at the markets today. Didn't want all of that to come off. Let's try this again. All right, let's take a look at SPY. Let's take a look at the 10-minute first. Let's take a look at it without the pre-market on there, all right? 10-minute chart without the pre-market. So you can see right here, the 3 EMA is up over the 8 EMA. Okay, so that's a bullish uptrend. Okay, but really, it's not moving up. It's consolidating over to the right. So here they are with their move yesterday, pushing it up at 1 p.m. and then, like I said, and then they just like to run out the clock. This is a typical Friday move, all right? Make a move, all right? Actually, they usually like to run out the clock for the first 45 minutes to an hour and a half, make a move, and then pin it there for the rest of the day. So this is normal for price. They pinned it here. You can see we got up over the all-time high anchored VWAP. All right, that's the purple line up here. All right, and then they pinned it there from 1 o'clock all the way till 4. Dirty rats, right? All right, so it's more of a bull flag 10-minute consolidation. And of course, you can see in the pre-market we got price over here gapping up in the morning. Okay, so that's where we are with this morning. I was looking to trade a 10-minute continuation. We did gap kind of far, so we'll see if we're going to gap and go, or if we're going to gap and fade, or if we're just going to gap and consolidate. We'll find out in the morning. We're going to probably box off the first 15 minutes of price action and trade that whoever breaks out of that first 15 minutes. So there's SPY. I was going to say trade a continuation pattern, but you can see they've already made the move up there. So there's 10-minute chart, 10-minute bullish consolidation. On the 2-hour chart, you can see the 3 EMA, that's the yellow one right here, up over the white EMA, which is the 8 EMA. All right, signaling a 2-hour uptrend. Now, my favorite trade is the 10-minute uptrend over VWAP inside of a 2-hour that resides inside the 2-hour uptrend, that also resides inside the daily uptrend, inside the weekly uptrend, inside the monthly uptrend. Okay, so today could be a good day because my favorite trade may manifest at some point. We'll see what happens, all right? Again, still looking for that 10-minute uptrend, all right? So we'll see. So there's SPY on the 2-hour. We got the 2-hour uptrend. We got the 10-minute uptrend or 10-minute bullish consolidation. And let's look at the daily chart, and we'll pick up this one right here. You can see on the daily chart, see all the green dots. Obviously, we're in a daily uptrend right there. We hit new all-time highs about 5 days ago. Price action here, higher low, higher high, closing over a bullish trap, okay, or a bullish cross, okay, up over the rising 17. That's the green dots right there. Okay, so price action, higher low, higher high. If you look at it with the quad lines on there, not sure what happened to the quad lines here, but we can take care of that real quick. Quad lines, we're up here at the top of quadrant 4. That's bullish, all right, and nothing's broken, so we're still in an uptrend. So there's SPY on the daily chart. Weekly chart, again, see all the green dots. Again, up here at the top over the 3 EMA on the weekly chart. That's bullish, still in an uptrend, nothing's broken. Monthly chart, okay, price action, see the price up over the 3 EMA, that's bullish, still in an uptrend. See all the green dots, okay, that's the 17 EMA. All right, so bullish and still in an uptrend. Let's take a look at QQQ, then we'll go look at some game plans. Start off with QQQ on the 10-minute uptrend coming into the close. More, you can see at 1 o'clock they pinned it there and just stuck it into the close. Okay, they didn't give you any breakout. So you can see here's price action consolidating right into the close. Just kind of you could draw a line right across the top. All right, and you see they're not going to give you the breakout. Okay, they're going to do it. They're going to do it overnight, all right, or early in the morning when you can't take advantage of it. All right, so you see there's a 10-minute uptrend, more of consolidation in those last 2 hours. You can see at 1 o'clock, move was pretty much almost over. And look at the high at 130 or so, and it's just consolidating sideways up over VWAP. All right, nice work there. Okay, so there's QQQ. All right, 10-minute. Going to call it an uptrend consolidation bull flag. Price moves up over to the right. Let's take a look at the 2-hour chart. All right, so we got our 10-minute uptrend. 2-hour chart, we got the 3 EMA just barely up over the 8 EMA right here. So we've got price action is 2-hour uptrend, not much, just a weak 2-hour uptrend. We'll see how far it goes. Hopefully they can hold that for another 3 candles today. We'll see, all right? But got a 2-hour uptrend, all right? And then we've got the daily uptrend. You can see all the green dots right there. Got a higher low and a higher high, closing over a bullish trap. See the space between the 3 and the 8, and the 3 is on top of the 8. Okay, so over a bullish trap. Over the rising 17, see the green dots rise from this location here up to this location here. So up over a rising 17 EMA. Okay, if we back out, I'm going to take this off, don't need it. Okay, if we back out, all the way out, you can see the move of the quadrant lines. We're up here at the top of quadrant 4. That is bullish. We're still in an uptrend. Nothing's broken yet. QQQ. All right, let's take a look at, we'll go around the horn and we'll go visit the game plans. FNGU. FNGU, higher low, higher high, closing under bearish trap. Okay, under the bearish trap. But over the rising 17 EMA. Again, in the middle of quadrant 4, we're still bullish up here. All right, nothing's broken, and we're still in an uptrend. Okay, now we made a low here, we made a little lower low, but we're coming back. This low was not below the 17, so that doesn't signal a downtrend. If they got below this low, that would signal a downtrend because that pokes below the 17 EMA. So still technically in an uptrend up here in the middle of quadrant 4. Again, bullish, still in an uptrend, FNGU. Diamond Dow. Okay, Diamond Dow made a higher low and a higher high, closing over a bullish trap right up there, okay, or bullish cross, either one. Okay, up over the rising 17 EMA. Again, you see the green dots, they rise from down here to up there, okay? So a rising 17 EMA. Up at the top here of quadrant 4, that's bullish and in an uptrend. Let's take a look at IWM. Here's IWM taking a higher low and a higher high, closing over a bearish trap, over the rising 17. Again, you can see the green dots start from down here and they rise up to here, a rising 17 EMA, okay? So those would be, those dots equal to 17 EMA, moving average right there. 17 exponential moving average. So you can see price action closing over the bearish trap because the 3 is underneath the 8. You can barely see it, but it's there. Okay, so over the bearish trap, but over the 17 EMA. So closing up here, kind of in the top section of quadrant 4. You can call it the middle ground, but that's still bullish, still in an uptrend. Okay, I like that. Here's the prior all-time high anchored VWAP. You can see price action clearly in an uptrend over that. Look at all those green dots. Is that beautiful or what? Okay, so let's take a look at SPY game plan. All right, and let's pick it up here and let's go to the 15-minute chart. Let's spread this out for a second. Okay, so might be kind of irrelevant this morning. We'll see what happens. Okay, pivot 660.30, above it I'm a bull, below it I'm a bear. Red erases green entry. Okay, so that would mean if the bears came in and pushed price down to this red line and further, okay, that would be a red erases green situation because price rallied from here up to there. Okay, and the bears obviously did not do that, but that would be my entry if the bears erased everything that the bulls just did. In other words, the bulls, all right, carried price, all right, or marched price from down here all the way up there. All right, so that would be green. Notice all the green candles. That would be a green move. Okay, now if there's a red erases green move, okay, the red would come in other words, the bears would march price all the way down here and erase everything that the bulls just did. So that makes this my red erases green entry down here. So that would be price below 658.40. All right. Green erases red again up here, up over 662.05. You can see we're clearly over that this morning. All right. So let's take a look at the pre-market. Actually, yeah, let's take a look at the pre-market with the pre-market on there. Okay, so you can see we've got some consolidation, okay, over prior consolidation, but we got a huge space in between. Okay, so I'm not interested in trading. I'm interested in trading a breakout of the first 15 minutes. Okay, so I'm probably going to box off. I'm going to do this. I'm going to box off the high up here, and I'm going to go, and I'm going to use that wick too. This time I'm going to use that wick, and I'm going to box off the low. Okay, so here's my channel. A break of this channel, all right, will signal a trade for me. Okay, in addition to that, on 15 minutes, I will box off the first 15 minutes and trade a break of the 15 minute. Bear in mind, if the 15-minute breakout to the downside happens to be right close to this bottom line, all right, in other words, the bears push price down and they break out of the first 15 minutes, I have to recognize that support could be right here, because obviously price rallied from this point, price bounced from this point. All right, so I will have to take profits almost immediately upon reaching this line. Okay, because more than likely price will bounce back, okay, to the top of the 15-minute opening range. And the same thing goes for the upside, okay? If price happens to break out of the top side, and right there is prior selling, you can see the bearish reversal right there, okay? So, and that's prior selling. There's a chance price will hit that line. I'll have to take profits quickly, all right? And probably come back and visit the low of the opening range, and possibly even the low of the channel here, okay? So it will probably be flipping back and forth for, I don't know, maybe an hour, maybe 3 hours. We'll see what happens, okay? So it might just consolidate further into the open market, okay? This is the pre-market. This would be the open market when things go live at 8:30, okay? Again, my green erases red entry, 662.05. Obviously, we're way up over that, so I'm going to have to use this channel as my guide, all right? And I'll have to use the first 15 minutes as my guide, okay? Now, if they start breaking rubber band candles underneath VWAP or over VWAP, all right, I'll be very interested in trading those the breaks of those rubber band candles. All right, so what do I like? Let's talk about what I like to trade. Let's go to the 15-minute, and let's zoom in here for a second. Let's pull this down. Got a different chart because it's got the pre-market on there. Okay, so I like 4 days and 11 days till expiration Friday options. Okay, I like Friday options because they got more open interest. I like them on the multiple of 5 because the multiples of 5 on Friday have more open interest. I trade strikes anywhere from $2 to $10 out of the money. That's the ones I like. I am not opposed to trading in the money options. I just find these have less risk, all right, because they're out of the money. All right, and I find that they also have less performance. Again, I'm not opposed to trading in the money, but for the purposes of risk, all right, I choose out of the money, and I'm willing to accept the less performance that goes with trading out of the money options. Of course, they're going to cost me less, so I'm not going to get the performance that a really good option that's in the money is going to give me, okay? If you've got a 30 delta, I'm only going to move 30 cents in my option, all right, when price moves $1, all right? If you've got a 100 or, yeah, let's call it 100 delta or 99 delta, okay, for every $1 that it moves, all right, you're probably going to get 99 cents of price action on your option. Okay, you see how the delta works there. Okay, when the price dollar moves a dollar, you're going to get 99 cents. But on the out of the money that only has a 30 delta, you're only going to get 30 cents of movement on $1 worth of movement from the underlying security. Okay, so I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. If a 10-minute downtrend were to manifest up here, okay, long before the red erases green entry, I'm not opposed to trading it as long as it breaks the 10-minute rubber band candle. Okay, same thing down here. If a 10-minute uptrend were to manifest, coming back down, see that tail and this bullish engulfing in this area here or off that uptrend line. Okay, I'm not opposed to trading the 10-minute uptrend down here as long as it breaks that 10-minute bullish rubber band candle. All right, so you understand that I can only take a short trade under 658.40. No, I can take one up here, but I have parameters for that. Okay, other notes that I need to make you aware of. Okay, the market is bullish. I'm not a big fan of going counter trend in a bullish market. So I'm probably going to be wanting to see a rubber band candle in order to be bullish. In order to be bearish. All right? Because overall, the market is bullish. We just went through it on the 10-minute from Friday, the 2-hour from Friday, the daily from Friday, the weekly from Friday, and the monthly from Friday. Okay? So I'm probably not very interested in trading the 10-minute downtrend, but I will trade it if it breaks a rubber band candle. I probably won't trade it with big position size either. All right, so that's just, I don't want to risk that much. It's a downtrend in a big uptrend that we're in right now. Okay, so what do I like? I like the 10-minute uptrend over VWAP. Right? I like it when it resides in that 2-hour uptrend. All right? That resides in the daily uptrend, the weekly uptrend, the monthly uptrend. Reason I like that, I got all those bigger time frames supporting my little 10-minute uptrend, all right? To push it higher, make it go further, all right? And make it last longer, all right? So that's what I like, all right? But I prefer an uptrend. All right, but I'm not opposed to trading a downtrend. All right, I just want to say I'm not a big fan of trading counter trend in a bullish market. All right, so there's a 15-minute chart of SPY on the game plan, just explained to traders. We're going to go over QQQ right now. All right, QQQ's got a game plan as well. Okay, and they gapped up as well also. Okay, QQQ. Pivot for QQQ is, see if I can zoom in here just a second so you can see things a little clearer. All right, 593.75. Above it, I'm a bull. Below it, I'm a bear. All right, I got a green erases red, which has already been violated or, triggered over 596.25. So we're way up here. We're gapping up. Might get a gap and go. I'm really not expecting a gap and go, but we might get a gap and go this morning. We had really fantastic numbers last week and the week before as far as economic numbers go. All right, and we'll get into the economic numbers a little bit later. All right, but I want to just mention that we did have really good economic numbers, so there may be a gap and go. We'll see. All right, green erase red over 596.25. Pivot 593.75. Markets are still bullish here. Okay, over the pivot, I'm a bull. Below the pivot, I'm a bear. Okay, red erases green underneath 591.10. Again, if the bears, okay, see the bulls carried price from, well, the bottom of that tail all the way up to the top. right up here, and then some in the pre-market. If the bears erase everything that the bulls did, that would be my entry down there. Okay, that would be kind of a bearish engulfing move by erasing everything that the bears did and more, making my entry here. Okay, now on that, all right, I don't like really taking or starting new trades after 2:30. Okay, so if this doesn't happen till 2:30, there's a high chance that I'm probably not going to take it. I don't like taking trades after 2:30. They tend to be risky. There's less time for them to play out, all right, with only an hour and a half. And 2:30 is a reversal time, okay? So that's one of those time where price action seems to change character around 2 or 2:30 sometimes. Okay, so you got the green erases red, which already violated, already, you can see already triggered because the price gapped up this morning. Got the pivot, got the red erases green. Same thing. I like 4 days and 11 days till expiration. Friday options on the multiple of 5, okay? I like the Friday options. They got more open interest. And if you look inside and you see the multiple of 5, that would be like 600, 605, 610. Okay, they tend to have more open interest there. More open interest means higher liquidity. Okay, it means a tighter bid-ask spread. I don't like paying more than 2 or 3 cents on my bid-ask spread. Okay, that's why I tend to trade options that kind of range between, well, preferable, not opposed to trading 10-cent options or lower, but preferably I like them between 20 cents and $1.50. That's about it. They get any higher than that, then they're getting close to being in the money, and now I've got more risk on the table than I prefer. I'd rather just roll it out into something with more time, all right, or a higher strike or a lower strike, whatever it is in the direction that I'm going into, or something with more time. Okay, so that either way, in order to reduce my risk. All right, so there's QQQ game plan. I already told you we're going to do the same thing this morning. Okay, I'm going to take a line. I'm going to box off the top of the channel. I'm going to take a line. I'm going to box off the bottom of the price action. Consolidation over consolidation. So that gives me a bullish bias this morning. Okay, then I'm going to box off the first 15 minutes of trading. Keep in mind, all right, once we break, we may hit this line, all right, and fall back and test the bottom of the opening range. Same thing if we break out to the downside, there's a likelihood of hitting this line, all right, and coming back and testing the top of the opening range, all right? So it'll be quick profits when we break out here or there if these lines are close, all right? It may be that price action starts to consolidate up here. That would be very bullish. I would like that more if price started to consolidate way up here in the next, well, we got 1 hour, all right? So there's QQQ. Let's take a look at the technicals. All right, T2101. Okay, I'm going to just say this 3 days ago, not 3 days ago, Wednesday, because that's Friday. Okay, that's Thursday, that's Wednesday. Okay, 3 days ago, this is the market breadth. Okay, so that right there, all right, was pretty much the last time we got down that low in the market breadth. Was the COVID, all right? Was the COVID rally, or it was the COVID, I'll have to look back, or it was the COVID dip. Either one. I'm pretty sure it was the COVID rally. All right, so that's T2101, and that was market participation. So you can see it was at the lowest just before we reversed and ripped up out of there and created the COVID rally. All right, so this was the last time price reversed in this area. And I don't know if price is reversing right now, okay? But we had one nice green candle yesterday. And again, I'm going to trade the uptrend until it ends, all right? When it's done, it's done, all right? And I'll know because the 2-hour uptrend will cease to exist. All right, and the 10-minute will cease to exist long before the 2-hour ceases to exist. Okay, so there's market breadth. This shows the participation in the uptrend. Okay, now as far as the downtrend goes, this shows increasing participation in the downtrend. All right, for the uptrend, this is the end of the participation, all right, or the low of the participation in the uptrend right here, and this is part of the downtrend. So we'll see if they can get that downtrend going. Maybe that we resume our uptrend if we happen to get up over 51% of that dip down that we just went through. Okay, this will then become part of the uptrend right here. We'll see what happens. That's market breadth. That's participation increasing for the uptrend. T21.22. All right, so we visited. We kind of knocked on the door of the overbought zone. They didn't open it, obviously, and we didn't spend much time in the buy zone, just enough for a coffee and cigarette. That's about it. And then you can see we spent the rest of the day chomping around in a bull flag in the buyer's chop zone. So you can sense why we had a pop this morning. This bull flag gave buyers the courage to buy with more participation, okay, and price popping up into the overbought zone and buy zone. So we got a nice pop. In addition to that, consolidation over prior consolidation. T21.23, okay, got a bearish gap that still has not been filled by the bulls. Okay, that's not a good sign. All right, this is the rubber band candle Thursday. Okay, right there's the rubber band candle. You see, this would be the spike candle. This would be the rubber band, all right, the free floating candle below. So we don't want to get below this on T21.23. You can see price action from the beginning of the day on Friday. Kind of bullish, moving up, holding the higher ground from this location down here. Okay? From the bigger perspective, it's a bear flag moving from this high down to this low and over to the right. On the short-term look, it's from this low up to this high and then over to the right. So we'll see what happens. Price action doing pretty well, planking almost over most of this consolidation right here from Thursday. Okay, so Friday's consolidation over Thursday's consolidation is a bullish outlook. All right, because it gives me a bullish bias, being since it's consolidating on top of most of it, not all of it. Okay, all of the price action from Thursday. All right, so there's 15-minute. Okay, 15-minute is not in an uptrend. It's still in a downtrend. All right, they have not made any higher highs yet. Okay, see, they have to make a higher high, like right up over the top of that. Now, they may do that in the pre-market. We'll see what happens. So there's T21.23, still in a downtrend, just not moving down. And not enough, they have not made a higher high, so there's definitely not in an uptrend. Okay, they're under the 200 SMA, not a happy place to be for me. Okay, so they're in a downtrend, and they're showing us a bear flag from the bigger perspective, from that high down to this low and over to the right. From the bigger perspective, it is a bull flag moving up and over to the right. So we'll see. It's anybody's game here, but I did like the bullish consolidation over prior consolidation, and I do like the gap up this morning. I'd like to see them fill this gap. All right, that would be nice to see the bulls finally fill a bearish gap. That would show me that they have recovered the fumble, all right, and are willing to carry the ball down and get some first downs. Okay, so there's T21.23. T21.23 3-bar chart, still in an uptrend. We have not broken anything. We're still bull flagging all the way up here at the top. This is the same product, but on a 3-bar time frame. Okay, that's like breaking the day up instead of into 10-minute segments, all right, or 15-minute segments. We're breaking it up into 3 equal segments. So price is up over to the right. So that's bullish up there. top of quadrant 4. We're up over the 200 SMA. That is a happy place for me. Okay, price action, top of quadrant 4, that's bullish and still in an uptrend. Okay, but notice on the 15, we'll go back to the 15. Again, we have failed to make a higher high so far. So we're still in a downtrend on the 15-minute T21-23. Remember, all the bigger time frames start out with a smaller time frame, all right, building out into a bigger time frame. Okay, so we'll see what happens. All right, will this 15-minute downtrend manifest into a 2-hour or 1-hour downtrend that that keeps going to manifest a 2-hour downtrend? We'll see. All right, they all start out on the smaller time frame and then transition into bigger and bigger time frames. Right now, 15 is in a downtrend, but the 3-bar is still in an uptrend right there. FNGU. Okay, always stick with the bigger time frame. Okay, that always rules. All right, because that's the overall look. All right, so there'll be multiple 10-minute uptrends inside of a monthly uptrend. Okay, you notice that because we trade them all the time, or inside of a weekly uptrend. FNGU. All right, so this will be Thursday's price action. Okay, this was the rubber band candle. No, this was the rubber band candle on Thursday for FNGU. Okay, because this was the spike candle. See how price started there, ended here. So that was the spike. This is the rubber band candle. We did not break the rubber band candle in regards to the point of interest, which is the 200 SMA. Same thing on the T21-23. Remember I showed you the spike candle and the rubber band candle. Notice we did not break the rubber band candle. We moved up, not much, but over to the right. You can see back here. Okay, remember this? We moved up and over to the right. Had we broke below this, closed below there, that would be a break of the rubber band candle on T21-23. Back to FNGU. Okay, so here's price action, kind of reversing here. Friday's price action, little red, little green, little red, little green, and then finally climbing on top of VWAP and consolidating up here at the highs. That's a bull flag. That is a bullish outlook. Okay, are they in an uptrend? They did not make any higher highs. Okay, so they're still, well, just barely. Okay, so let's see. Let me just see here. High there, 29.17. High here, 29.16. Okay, so they made a higher high. So technically they're in an uptrend now. Okay, because they barely squeaked it out just by 1 penny. Okay, they made a higher high by 1 penny, FNGU. So I give it to them. All right, so they're in an uptrend. Now, I thought they were in a downtrend. I thought they didn't make a higher high, but they did. All right, so there's 15-minute uptrend on FNGU. Not a big healthy one. They only beat it by a penny. All right, but it's enough to technically call it an uptrend. We're up over the VWAP here. That's bullish. And you can see we're up here at the 200 SMA, consolidating, leaning on it, fighting with it to get on top of it. All right, so there's FNGU on the 15-minute. I like that. All right, I like to see price continue to fight and lean on it, okay, and hold that higher ground. It's important that it holds the higher ground up there. All right, so there's FNGU. Let's take a look at a few others. All right, back here, let's look at, I don't know if I visited silver and gold. Let's go take a look at silver. Okay, on the daily chart. Okay, you can see silver. That is the all-time high right up here. New 14-year high. Here's our quadrant lines. 1, 2, 3, 4. There's no 5. Okay, we're not up here yet. Okay, so 1, 2, 3, 4. Top of quadrant 4. That's bullish. Still in an uptrend. GLD. Okay, top of quadrant 4. See that? All right, near the all-time highs. That's bullish, still in an uptrend. Okay, nothing's broken. Higher low, higher high, closing over a bullish trap over the 17. Gold still bullish, still in an uptrend. All right, USO. And look at USO. Okay, look, they gave it up. Look at that, and look at them now. They're coming all the way back down to 75. That's why I say, don't be too hasty to give them the bullish label. All right, because they just have this habit of moving up and giving it up. And you can see multiple times moving up, giving it up, moving up, giving it up, moving up, giving it up, again moving up, and you can see already giving it up. All right, I wanted to give them the bullish label for sticking that out inside the upper third. They couldn't hold it, so they're just still neutral. All right, still neutral on USO. Nice candle though. I just don't like all that wick. Shows me bearish control up there. All right, price action. What do we got? Higher low, higher high, closing over a bullish trap, over the hooking up 17 EMA. Just can't hold that higher ground. If they would have closed up here in the upper third, that'd be bullish. They couldn't get it done. So there's USO. All right, so still just neutral. They are on the bullish side of the midpoint now for about, 4 or 5 months. June, July, okay. June, July, August, September. So that's 4 months. They've been hanging out on the top side of the three-year high anchored VWAP and the midpoint. So it's got a bullish outlook, but just not ready yet. Okay, cake is not done. They're not baked enough yet. USO. Let's take a look at UNG. Okay, UNG, bottom of quadrant 4. You can see the huge head and shoulders. Head, right shoulder, left shoulder. And what happens? The right arm extends down past the left arm down here. Okay, so we're in a downtrend, all right, because we haven't made any higher highs. And we're at the bottom of quadrant 1. Okay, quadrant 1. This is the all-time low. So that makes that bearish and still in a downtrend. Okay, and this is a two-year high anchored VWAP right there. Very low bar set. Okay, really low bar considering these are some highs, and we're nowhere near that number right there. We're just using a two-year high, and we still can't even stay on top of that. So there's UNG. All right, let's take a look at the economic package and let's wrap this up. Okay, dollar still in a downtrend. You can see price action moves from high to low. So price action, is this going to work? Is it going to work or is it not going to work? Down and over to the right. So that's a bear flag. Okay, so price action still in a bear flag, still in a downtrend. They haven't made any higher highs. So we closed near 97.21 yesterday, or 98.21 last night, or yesterday sometime. Okay, there's the dollar. All right, let's take that off. Let's go visit Max Payne. Max Payne for this is SPY options for today. 661. Put the call ratio 2.26. Okay, for each call, 2.2 puts. 2.26 puts for each call that expires today. Okay, so could be a put squeeze on the table. We'll see. 661. All right, was Max Payne. Put the call ratio 2.26 puts for each call that expires today. On the economic calendar today, we got the main event is the employment situation at 8:30 on Friday. Okay, that's the main event right there. Today, we've got pending home sales at 10, Dallas Fed Manufacturing Survey, that's at 10:30, and that's it. Tomorrow, we got Case-Shiller Home Price Index. Okay, if you didn't like this index, we got another one for you. Okay, so Case-Shiller Home Price Index at 9 o'clock. FHFA House Price Index. So if you didn't like that one or this one, we're going to give you a third one at 9 o'clock. Chicago PMI, 9:45. They're going to release that. Consumer confidence at 10. Jolts at 10. All right. Other than that, light day. Okay. On Wednesday, we've got MBA mortgage applications at 7. That's pretty normal, almost every Wednesday. ADP employment report, 8:15. PMI manufacturing final, 9:45. ISM manufacturing index at 10 o'clock. Consumer spending at 10. And a petroleum report at 10:30. Okay. Even though this has employment in it, this is the big one right here. That one. That's the one. Okay. We'll still get jobless claims at 8:30 on Thursday. That's the big one. That's the market mover, is that employment situation. All right. So I'll visit Thursday and Friday again later on. Again, the main event is Thursday. All right, traders. I'll see you guys in about 30 minutes. Let me render my video. Get it out there for everybody in podcast land and digital land so that they can enjoy the content as well. Let me take a look and see if there's any questions in the room. And Chip, very low price on your out of the money options makes your cost gain ratio better than with a higher delta option on winning trade. Yes, true. But the leverage works, right. It works same way, yes. And when it goes against me, it's just as bad. Looming government shutdown this week. You hope we do. I hope we don't. I mean, all it does is we can wind up paying furloughs for, people that don't come into work because the government shut down. So I'd rather see them working and paying them than wasting money while they're on furlough. Yay, good morning, Tex. Good morning, Jim. Layoffs this time, no furlough. Okay. That'll be interesting to see how that works out. I'm just going to say the party in power, the party that is in power tends to lose the shutdown fight almost all the time. I don't know how, but the news spins it that way. And it's always their fault. But I don't care for either side, all right? There's plenty of room for improvement on both sides. Okay, so I don't pick winners and losers. I just want improvements. That's it. All right, I'll see you guys in 30 minutes, and we'll kick off the market.